Welcome traders. In today's video, I'm going to be talking about how to grow a small account really fast using the major round numbers as the foundation of your risk management. So let's begin. Now, this will be for Forex and futures markets. I will be using Forex charts for this video, but understand that it is the same exact thing if you are using futures charts and you are using the major round numbers. Now, I'm going to go ahead and pretend as if we are starting off with $1,000. Now, this is our box from 0 to 0. So here's our zeros here, all the way to zeros here. Now, I want to grow this $1,000 to $10,000 as quick as possible. Now, I'm going to explain how to do so. Now, understand that this is not financial advice. Repeat, this is not financial advice. I'm not telling you what to do. I'm just telling you what I did. And hopefully, you will be able to repeat the process flawlessly and execute with absolutely no fear. But step one, you need to understand that you need to know exactly what you're looking for. What do your setups look like? You need to know exactly what you're looking for. I know what my setups look like. I have multiple variations or variants of what my setup can present as, but I am using these major round numbers as a foundation for my risk management. Now, one full quarter. So from 0 to 25, 25 to 50, 50 to 75, 75 to zeros. One full quarter will be my max stop loss. Now, that does not mean that I will use the full quarter, but one full quarter is the basis of a max stop for me. Now, if I'm trading $1,000, I will start off trading with 10 cents. 10 cents is a 0.10. 0.10. A 0.10 for one quarter is $250. Now, I can already hear some of you saying, well, that's 25% of the account. That's insane. Again, I won't use a full quarter. I often don't use a full quarter, but that is my max stop. So not only do I know what I am looking for, I know how much I'm putting down on the table. Now, this is traders' biggest mistake here is that not only do they not know what they're looking for, but they don't know what they're putting on the table. So they'll just keep taking trades and then eventually you'll just blow your account. Now, I did that for years, but this will be my max position size. I always put in a starter. So a starter can be either 1/3 of this, half of this, or maybe even sometimes a tenth of this. So for a starter, I will put on a 0.01 for a starter. This is just to get in. And then when my trade is confirming, so let's just say I have a starter up here. When my trade is confirming, I add the rest of my positions because by this time that they should just be moving in my direction. And again, if one quarter with a full position size is going to give me $250, if I am fully positioned for $50, or depending on the box that you're trading, whether it's a $100 box, a $1,000 box. This is a $1,000 box. 4,900 to 5,000 is $1,000. But again, if I'm fully positioned, I'm going from 1,000 to 1,500 in one trade. Now, this is just an example of how I would grow a small account really quickly using common sense. I need to know what my setup looks like. I need to know how much I'm risking, how much I'm putting down. Because again, this is why I'm using the major round numbers, because I will always know how much I am risking. So just to give some examples, once again, a point 10 for one quarter is $250. But a point 20 for one quarter, whoops, is $500. So if you get where I'm coming here using simple mathematics, multiplication, this is one quarter. So from zero to zero, this would be one quarter. If you're going from zero to zero, that's $1,000 for a point 10. So whatever my lot size is, or let me better phrase this, whatever my account size is, that will be my max position size. So from 1,000 to $2,000, I'm trading point 10 all the way to 2,000. You get to 2,000, you bump it up. So when Stacey says that these setups are scalable, he's not saying gamble. Now, I know a lot of us beginners. Now, I'm not a beginner, but as a beginner, when you hear a trader say scale up, you may think that that means that they're saying to over leverage. That's not the case. If you do this correctly, you actually should never blow your account because, again, whatever your account size is, that's going to be your max position size. If I have a $500 account, my max position size is going to be a 0.05. Now, again, max position size. I have to build up to this in the trade. So again, you can do this in 1/10, a third, half, 1/4. A starter for me, if I was to do that, if I had a $500 account, a starter for me would be a 0.01 right here, 0.01 again. And then as the trade is confirming, I may be adding another one, 0.01, breakout pullback, 0.01 right here. And then the rest as they're breaking down. Now I'm fully positioned. So it doesn't take much to go from 500 to 1,000 from this point in just a couple of trades. Now you can be as conservative or aggressive as you like doing this. But again, this is why I am using the major round numbers, because it gives me cognitive clarity, as I stated in my prior videos. Cognitive clarity of where to get in, cognitive clarity of how much to risk, cognitive clarity of where to get out if my trade is not confirming, or if my trade is confirming, where to get out, entries, exits. Now, Just to give some more examples, if you're trading a standard lot on a $1,000 box, that is going to be $2,500 for 1 quarter. So just imagine when you get to this point, how quickly and easily it would be for you to make $5,000 to $10,000 per trade. And this is how I'm doing it. This is how I'm able to calculate how much I am risking. Now, again, this is all based off your account size. You can do the same thing for prop firms. Now, let me just give you an example. Most futures prop firms out there for a 1,000, a $100,000 account, you have a $6,000 drawdown. So understand that you don't have $100,000. You have $6,000. So what does that mean? That means that now, to give an example, if you're trading GC, or really you should be trading MGC. If you're trading the micro gold for futures, for example, and you have a 100K account and your max drawdown is $6,000, your max position size should be 6 micros. Now, that doesn't mean when you get a trade that you put on 6 micros all at once. Now, you can do that if you're really confident of where you're getting in. There will be times where I put the whole max position in one spot because maybe it's a pin hammer right at 50 or a pin hammer right off of the double zeros, whether that's to the up or downside, or maybe an engulfment, an M, a head and shoulders. It's 10 a.m. We're at the high of the day, high of the week. The trade is confirmed. So if I'm feeling really, really confident in the trade and I'm really confident in the risk, because this is why I do this, so that I can know how much I'm losing with a max stop, which is 1 quarter always for me. But if you're trading 100K account, $6,000 drawdown, once again, 6 micros, you shouldn't go anything higher than 6 micros. What's crazy is that traders are going straight to the minis. Insane, right? You don't have 100K. You have 6,000. Now, I will say this. This is why I don't trade prop firms anymore, at least, because I had the realization that these prop firms are asking you to flip $6,000. That's what they're asking you to do. Uh, because you don't have 100K. Uh, The illusion is that you have 100K because you're seeing the P&L go from 100K to 102K, 104K. But if you were to put $6,000 in a live account and do the exact same thing that I'm telling you, you'll be amazed at what you can do with just a small account and how fast you'll be able to compound it, trading the best trade setups possible. Now, this is how I'm figuring everything out because again, 1 quarter is 1 quarter. So again, a point 10 would be $250. Now, this for in the futures case would be 1 micro. That's $250. 2 micros, $500. 3 micros, $750. 4 micros, that's 1,000. That's $1,000 for 1 quarter. 5 micros, that's $1,250. Six micros, that's $1,500. Now, do you see what I'm doing here? Do you see what's happening? I'm sure you've all had four quarters in your lifetime as a kid. As a kid, you know, $1 is a lot of money. And as a kid, you learn how to count money really quickly: pennies, nickels, dimes, quarters. But here I'm specifically talking about quarters because it takes four quarters to make up $1, right? Okay, so if that's the case, that's what I'm doing for my risk management. I'm I'm splitting everything up in quarters because for me, that's the easiest way to mathematically calculate my risk, especially if I'm going to be using the major round numbers anyway, from 0 to 0. We have zero, or the double zeros. We have 25. We have 50. We have 75. We have the double zeros all over again. Now, I'm using these numbers once again to calculate my risk. A lot of you are trading and you may or may not know what you're doing, but a lot of you think that the trading strategy needs to be improved on, which that is the case, but follow along with me. You're too stuck on the price action. You're too stuck on the candles. You're too stuck on, oh, this, oh, that, things that don't even matter. What matters is the price. Now, even when I'm entering a market, because I had this happen a couple of days ago in my live session. Hey, can you go to this time frame? Can you go to that time frame? And then I state, look, look at where the peak formation is. It's at the quarter, which this would be my best fill to get in. If I can't get in here, I would take the next best fill. Now I was on a 30-minute chart, and it was like, hey, can you look at this time frame, that time frame? I'm like, why? Because I already know where I'm getting in. Not only do I know where I'm getting in, I know where I'm getting out for a max stop. And I also know, according to my account size, my max position size. Max, if I want to compound that account really quickly. Now, again, one more time, this is not financial advice, and I'm not telling you what to do. I'm just telling you what I'm doing, how I was able to pass those pot firms really quickly. I passed about five 100K accounts within a span of 4 weeks, and I was able to extract capital from that prop firm and move to a live account. And from that live account, I'm essentially doing the same thing I was doing on that prop firm, which is the same thing I do on my very, very small live accounts, which I do occasionally do for fun, just to test myself. I'll put $100, $200 in the account and see how fast I can go to 10,000. Now, little do you all know, this is recently, within the past 3 weeks, I was able to scale a $250 account to $8,000 in just a couple of trades, within 5 to 6 trades. Now, a lot of you are thinking like, okay, well, how is he doing that? I just told you. And this is how and why I use the numbers. Now, if you're trading a futures account, forex account with high leverage, which again, manage your risk. You need to be careful with what you're doing. You need to know what you're doing. You need to know your setups. You need to know how much you're risking. You need to be comfortable with how much you're risking. You need to place an entry, place a stop, place a target. And after that, practice walking away, because after you do all of that, there's nothing else to do. They're either going to hit your stop or they're going to hit your target. And this is why you need to have a plan through and through, not just the trading strategy, but you also need to have a risk management strategy. I have a conservative and a very, very aggressive trading risk management protocol, which I have been tweaking for the past 3, 4, 5 years. And this is what I have come up with. This is how you can take $100 to $10,000 to $100,000 to $1 million to $10 million. You need to know your setups. You need to know how much you're risking. And once again, the math is easy because 1/4, for example, I'm just going to do a random lot. 1/4 for 7 lots. Now, again, one lot for 1/4 is 2,500. So 2,500 times 7 is $17,500. Now, again, I just said random lots, so I just said 7 lots. So 1/4 is going to equal that much. Now, depending on the size of your account and your compound strategy, you'll have the cognitive clarity of how much you're going to risk and how much you're going to make. Now, 3R of this, so times 3, it's going to equal $52,000. It's going to equal that much. And this is one trade, by the way. This is one trade. Again, I'll go to a very, very small lot. Uh, we might as well just do 0.01. 0.01 for 1/4 is $25. $25. Whether it's micros, minis, mini lots, micro lots, standard lots. If you do this correctly, you'll know how much you're risking. So I have a few chart examples here. This was last week. Peak formation low. I'm just going to go over the process now. Peak formation high, peak formation low on day one. Monday is the opening range. Don't forget. From the peak formation low, we have one, two. Well, technically, one is actually from 75 to 0. So one, two, 3 levels of rise. 3 levels of rise. We already had a peak formation there. And they're putting peak formations into the peak formation. Now, for whatever reason, you didn't get that fill price because of the candle, the timing, etc. Again, I'm getting the next best fill or as close to those major round numbers or better as possible. Now, example, if I had $1,000 account and I just went ahead and put everything here, a point 10, went ahead and put everything here, and I'm risking 150 pips, which is going to equate to $150. Now, again, 1/4 is a max stop, which I rarely ever get to that point. I rarely ever need to exercise a max stop. But right there, boom, that's $150 of risk at a point 10. And if my target is a quarter outside of that box, which is about 700 pips. Let me just pull out my calculator for just a second. 700 pips. So a point 10, little does everyone know, is actually $1 per point. So if I'm risking $150 to make 700, and mind you, I am on a $1,000 account. I just went from 1,000 to 1,700 in one trade. I do that three, four, five, six more times. I'm going to be at around three, four, five, six, seven, eight, $10,000, depending on the size of the trade. If I plan to double down, which there will be times that I actually feel confident enough to do that. Now, again, you shouldn't be doing anything if you don't know what you're looking for. If you don't know what you're looking for, if you don't know how much you're risking, if you don't know how and why the numbers, the major round numbers are very, very crucial to understand. They're very important. Now, I know traders that don't use these numbers. I'm not talking to you. I'm talking to those that are still learning. I'm talking to those that don't know what they're doing. If you do not know what you're doing, you don't need to be trading until you know what you're doing. You know what you're looking for very specifically. Now, just a couple of more examples. NASDAQ, a very, very similar trade setup as gold. Peak formation low, peak formation high, three levels of rise. That they pin into 75. But again, let's just say I had a $2,500 account and I'm feeling pretty good. I'm gonna go ahead and put everything here. Point two. Boom. Point two. So a point two, with about 100 to 150 pips of a stop loss up top. And you know every quarter is gonna be $500. So 500, 1,000, 1,500, 2,000. You just flipped the account. You just went from 2,500 to 4,500. You just doubled the account. I just imagine if you stay disciplined enough, consistent enough, clear enough to do this once or twice a week. This is why you don't need to be trading every day because not every day is a scalable trade setup. Now, I am pretty ballsy. So when I get a setup like this, okay, I max risk up here. All right, I'll just put everything right there. Boom. And then right here, I double down. So now, excuse me. Now, so one quarter is not only 500 now. One quarter is 1,000 from that point. So 1,000, 2,000, 3,000, 4,000. And if you stay consistent enough, disciplined enough, again, do the math. Add it up. Do the math. Know your setups, build your playbook, calculate your risk, build the spreadsheet, and do the math. And then you'll see how very, very, very quickly setups like this, setup like these, excuse me, setups like these can do to your account. Peak formation low, peak formation high, peak formation high, lower peak formation high, lower peak formation high. They break the low of the day. They pull back and give a lower peak formation high at 75. Pin engulfing entry. Let's just say I go ahead and put 40 cents here. So each quarter is going to be $1,000. As long as I'm fully positioned by the time I get to 50, because a lot of the times I'll just place a starter. So 10 cents, 10 cents, 10 cents, 10 more cents, and then boom, $1,000, $2,000, and I'm done. And just like that, you can double, triple, quadruple your account in just one trade. 10x, 20x, 30x. I've done this. I have done this for years. Now, there was plenty of times where I was actually blowing up my account. Build it up, build it up, build it up, blow it up. Build it up, build it up, build it up, blow it up. Blow it up, blow it up, blow it up. Because I was not, or I didn't have, excuse me, a risk management protocol for each level that I will encounter in compounding my account from 1,000 to 10,000, from 10,000 to 100,000. Now, I'm very comfortable where I'm at. I'll just put I'll just put 2,000 in a live account, trade it up to 10,000, withdraw, do it again. Put 2,000 in, trade it up to 10,000, withdraw. So I never go past 40 cents. So if you think about it, again, my this is my own protocol for risk management, and it protects me because I can only lose a certain amount. If I only have $2,000 in the account, I can only lose 2,000. Because I am pretty ballsy. I've always been pretty ballsy with everything that I do. So for me, I have to be extra, extra, extra careful because when it comes to putting down risk, you might as well call me a professional gambler because I can put on the greatest poker face of all time, and from there, hope is on the table. But you don't need hope if you have a rinse and repeat setup that you are taking over and over and over again. Entry, stop loss, take profit, and be done. Now, all of these are pump and dumps. That they all have the same criteria. If you don't know what the criteria is, I highly suggest that you go to my prior videos and you go get that information. You go learn what these major round numbers are. You learn what three levels of rise is. You learn what the peak formations are. You learn and understand why the timings are so important. And then the biggest thing of all is to not question anything after that point. Because I get this question, oh, why is 10 a.m. so important? Um, because by that time the trapping should be done. And then they ask again, oh, well, why is that important? Why does it matter? When you have the information, the next step is to apply it. Information without application is just bullshit at the end of the day. So when you have the information and you're not applying it and getting 1% better each day, because this is not a get rich quick schematic. This is a compounding evolution system. Now, this is just how I perceive it. I'm using the markets and I'm bettering myself 1%, 2%, 5% every single day, because the markets can be very humbling. You could grow an account, and right when you think that you're unbeatable is when the market turns you upside down and beats you all over again because you get too ahead of yourself. Understand that this can be very damaging to your life, to your spirit, to your psychology, to your mental and physical health. So it's important that you know what you are doing. You know what you're looking for. You know how much you are risking, and you rinse and repeat over and over and over and over again. Same signals, same setups. One, two, three. There we go again. One, two, three. 3 levels of rise from the peak formation low on the back side of the week. One, two, 3 levels of rise. Trap volume on that third level of rise. Space to fall through, back down to that peak formation. Now, now that that's been covered, hopefully you all can understand where you need to improve on from here. You need to have a goal. You need to know where you're going. So print out a spreadsheet. If you don't know how to do that, just ask ChatGPT. We have AI now. The AI would do it for you. You can actually just post all of your trades to ChatGPT and tell it to put it in a spreadsheet and tell it your risk management plan, and it'll do everything for you. So there's no excuse. Now, 1% better each day, everyone. That is the goal. I will see you all on the next video. Thank you for watching this video. If you've got to this point of the video, and in the comment section, if you have any questions about the recent price action, you can put those questions in the comment section and I will answer those questions. But I trade every single day live in front of everyone. I go over this process every single day. Now, does that mean we're trading every single day? Absolutely not. But I repeat the same process every single day. So if you're interested, link is in the description. But until then, I will see you all on the next. And hopefully, once again, you are all getting 1% better each day and focusing on what matters. Focus on what matters and eliminate all distractions. Peace.